Alrighty, so this is the 15th video of the Maybe series, and it's the 8th under enterprise value and equity value. And in this kind of topic around like sales and their effect on enterprise value and equity value, this is kind of a combination of the accounting stuff that we've covered so far and like the different transactions that we looked at in terms of how they affect our enterprise value and equity value. And honestly, you could probably piece those two together even without this video, but I just want to make it super clear so that it's easier for you folks to kind of understand, right? So let's say that you get in an interview this question, right? Let's say that a company sold $200 worth of, let's just say, equipment, right? And it was priced at $100, right? In terms of kind of their inventory, right? How will this affect enterprise value and equity value? Right? So at the end of the day, what this question really is it's first an accounting question, and then you're going to see how it affects enterprise value and equity value, right? So you're kind of looking at both of those before you can actually say that how this affected your enterprise value and your equity value. And let's just say this is at a 25% tax rate, right? So the way that I would do this is just how you would walk through a regular accounting question, right? So you write down your three statements, and then you say, okay, well, they have revenue of 200, and they have, let's say, cost of goods sold of 100, meaning that everything else staying equal, their earnings before taxes are up by 100. And our taxes on this are going to be 25, meaning that their overall net income has increased by 75, right? That flows through to your cash flow statement. There's an increase of 75 net income. Now, at this point in time, remember, you bought the inventory and then you're selling the inventory. So we could technically have a minus 100 and a plus 100, right? But those kind of cancel out. So I don't even think that you really need to write those out, right? At the end of the day, what really happened here is that you have $100 more in pre-tax income, and you're just going to flow that through your cash flow statement, right? So overall, your change in cash is up by 75. So now on our balance sheet, right, we have our assets. So our cash is up by 75, right? In terms of our inventory, right? That first went up by 100, now it's down by 100, right? So this is kind of flat. And then our liabilities, no change there. And our shareholders' equity, that is up by 75, right? So let's see, how does this affect our enterprise value and our equity value, right? Well, let's look at equity value first. We know that equity value changes when common shareholders' equity changes. So we know that our shareholders' equity, this increased by 75, which means that our equity value also increased by 75. Now let's look at our enterprise value, right? Now our enterprise value changes if our net operating assets change, right? So how did our net operating assets change, right? In this question, it doesn't say that we bought the inventory, right? The inventory was simply on our books and we sold it, right? So because of that, the amount of operating assets that we have actually decreased, right? The amount of dollars that were in kind of tied up in the operations of the business, they are now out of the business, right? Meaning that our net operating assets are actually down by the full inventory amount. So that also means that our enterprise value is down by 100. And this is an important distinction to make. And I know that it's kind of confusing when I write it out like this, or I talk about like the minus 100, the plus 100 over here. But at the end of the day, look at what the question is really asking you, right? We sold $200 and the inventory was on our books for $100. So what happened, right? We had a sale, there was a cost associated with it, and that brought our inventory amount down. So over this period of time, what actually happened to enterprise value? Well, we got rid of $100 worth of inventory. So we got rid of $100 worth of operating assets, meaning that overall, the enterprise value went down by 100. Right? So this is an important distinction. Now let's say that the question says, okay, so it went down by 100. Well, let's say that they reinvest this cash into inventory, right? So they put this cash back into inventory, then that would be a plus 75, right, to our net operating assets, giving us a minus 25 in terms of our enterprise value, right? So a bit kind of confusing, and you have to make sure that you're really particular about it. But overall, that's how like a sale or a purchase of inventory affects your enterprise value and your equity value. So I hope that's been helpful, and yeah, we'll hop into the next one.